The government is shut down. Congress already missed the September 30th deadline to act on health insurance subsidies, and those actions could cost Americans hundreds of dollars in health insurance costs in 2026. If you've seen headlines about the shutdown, the ACA subsidies expiring, and Trump's one big beautiful bill and thought, wait, how does this actually apply to me? You're not alone. In this video, I'll break down what just happened, why the deadline matters, and why the political fight over health insurance subsidies could affect the entire health insurance marketplace, whether you get health insurance from your job, the health insurance state marketplaces, or not at all. Let's start with the basics. Under the Affordable Care Act, many people who get health insurance through the federal or state marketplaces are eligible for premium tax credits. Those are subsidies. They're designed to cap how much of your income is actually spent on health insurance premiums. It's usually capped around 8.5%, and the rest of the cost is covered by the government. These subsidies have made health insurance affordable for roughly 80% of marketplace enrollees. And with the addition of the Inflation Reduction Act and the American Rescue Plan a few years ago, even more middle-income families have access. But here's the kicker. Those subsidies are set to expire at the end of 2025. When these subsidies end, 13 million Americans could see their health insurance premiums going up on January 1st, 2026. A typical 30-year-old making about $50,000 a year could see their health insurance go up $200 a month. Or an older person or a family in a high-cost state could see their costs going up by $400 to $600 a month. That's not just a DC budget issue, that's real money out of real wallets. And with many Americans these days struggling to meet ends meet, it's possible they will just drop health insurance coverage. And that would roll back one of the biggest achievements of the ACA, which is expanding the percentage of the country that actually has health insurance. Now, if you have health insurance through your job, for instance, you might be thinking, this doesn't really affect me. I don't even use the premium tax credits. But here's the thing, when healthy people drop out of health insurance plans, it raises the cost for everyone else. Health insurance is a business based on managing risk. If many of the healthy people drop health insurance and only sick people remain, premiums go up, health insurance companies may pull out of offering business, and the entire system can start to unravel a bit. And for the healthy people who decided to drop coverage, well, one extreme event like a car crash or appendicitis could set them back by thousands of dollars in medical bills. So when subsidies disappear and people bail on health insurance, it actually has ripple effects for the rest of the healthcare market. But the debate about renewing the subsidies isn't just based on numbers, it's also based on ideology, and that's where the Trump one big beautiful bill comes in. For years, ACA subsidies have been a political football. Democrats argue they're essential for affordable coverage, Republicans argue they're unsustainable, and they distort the healthcare market. Enter Trump's new proposal. It's pitched as a plan to make affordable health insurance without government overreach, but in effect, it would remove ACA subsidies and replace them with tax-advantaged health savings accounts and state-level alternatives. Translation, instead of direct help with premiums, you get a tax break if you can afford to set the money aside for health insurance costs first. This could leave lower and middle-income Americans behind, the exact type of groups that the ACA subsidies were designed to protect. So what happens if Congress does nothing? Let's break down the scenarios. There are three possible scenarios. Congress could extend the subsidies again, which would require bipartisan support. This is a tricky area given there are midterm elections coming up next year. Second, the premiums will expire, premiums will raise, probably people will lose coverage or opt out of coverage, and there could be some political fallout similar to how there was in 2017. Third, the subsidies could get replaced with something like that's in Trump's bill, replacing income-based aid for health insurance with tax-based incentives. This would fundamentally alter how the health insurance marketplace works. First, know that we are on track for the enhanced subsidies to disappear in 2026. That means a very similar plan in the next year will cost much more money if you're taking advantage of these subsidies. Still, we recommend not dropping coverage if possible. Second, check your eligibility on healthcare.gov with this reality in mind. Although the expanded subsidies are gone, there's still the original subsidies which will help you pay for health insurance. And some families may be eligible for Medicaid or CHIP. Third, shop around. Insurers offer different rates for different people, and in 2026, maybe a different health insurance company is cheaper for you for a similar plan. Fourth and finally, make your voice heard. If you rely on these income tax credits, call your local House representative. This is an ongoing debate and one that is not fully settled. Until Congress gives us certainty, awareness and preparation are your best next step. So as the headlines fade and the political blame game rolls on, remember this isn't just about policy, this is the price of getting sick in America. We'll track every move in this story and how it affects your livelihood, because reform of the ACA isn't just about that policy, it's about how we shape the healthcare system in this country. Health insurance subsidies may not sound exciting, but for millions of people in this country, they're the difference between coverage and crisis.